So I do apologize for missing today's Sunday stock talk. I just spent a little bit more time with my family today. Really, there's no other explanation other than my lady's pregnant. We're expecting the baby to be due any minute, and we're just spending more quality time. So instead of going live and spending 30 minutes, just thought that I would kind of come on here and quickly talk about what to look forward to this week. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. So the first thing that I want to talk about is the markets slightly pulled back last week. The big question to ask yourself this week is, will the markets continue to sell off? If so, be cautious, stay cash. I don't encourage beginners to short, although you might see me short. I'm not a beginner, right? I would never encourage, to do something that just because it aligns with my risk tolerance doesn't mean that it's going to align with yours. With that being said, again, markets did pull back a small amount. Some people took it more, overall NASDAQ market didn't pull back very much. More of the lower cap stocks, kind of like Oklo, saw more of a significant pullback, right? From overall highs to lows, saw like a 25% retracement. The thing that I want to highlight is that if market sentiment resumes to being bullish, which is probably very likely, right? Because markets have been incredibly bullish on the larger time frames, it would then support the case to go long. So if you believe that markets will recover, that's the trigger I would look out for to see if market sentiment and buying pressure begins to go back in favor for the bulls. Now, how do you pick up on that? Remember, it's a very common theme that on Mondays, a lot of traders don't like to trade because they're still trying to decide which way the market is going. A lot of our LPP traders, if they do trade, they size down on Mondays, meaning that they reduce their position size, respecting that volatility can be a little bit greater. And because of the lack of direction, they want to be more cautious. They're not afraid, they're just more cautious. So that would be one step that I would take into consideration. An example would also be that because overall markets sold off, there are some blue chip companies that are decent buys if you believe that markets are going to recover. That's if you believe that markets are going to recover. I'm not saying that they will, but markets have been more bullish than bearish long term. So if you think that markets are going to recover, Amazon recently saw a nice little retracement. If it does recover back to retest previous highs, that's an 8% gap up. Not bad, right? For a multi-trillion-dollar company. Like, I'm not talking about a penny stock. I'm talking about one of the most valuable companies that's publicly traded. Now, if your risk tolerance is a little bit greater, one of the stocks that saw more significant pullback is Oklo. But that makes sense, right? Because Oklo, like many of these, in my opinion, piece of crap companies that are overhyped up, only can be bullish during irrational bullish markets. But just like we saw last week, as soon as the sentiment slightly shifts, we begin to see selling pressure on the most overhyped up stocks. But if the buying pressure picks back up for the overall market, remember, it will then go back to support irrational valuations. So that does mean that if markets do begin to uptick, companies like Oklo can be given the environment to also recover as well. This thing offers nearly a 30% retracement. Let me make this very clear. I do not like beginners trading stocks like this, but I also don't like to overwhelm people with me being a little bit more conservative and discourage anyone to ever trade something like this. I think that, again, it is my job to make you aware of the good and the bad, and you take that information as you please. If you're okay with the risk that this might, present, then that's on you. This is not a safe stock to go long or to go short. It's a high risk, high reward type of play, however it is that you see it. So please make sure that if you're just getting started, please do yourself a favor and just avoid stocks like this. But there's a lot of them. I just like talking about opportunity because it is what's going on in the market. If irrational markets continue to resume being bullish, it will allow Oklo to have the environment to continue to recover. Like, that's just most likely what's bound to happen. I don't support it. It's just the way that the markets have been trading. There's a reason Oklo is up an insane amount within a very short period of time, not because of its fundamentals. It's all because of its hype, right? Its momentum. Oklo is one of them. The other one that I quickly wanted to pull up, what was it? It was Irene, kind of, it's incredibly bullish within a very short period of time. There was also open that saw a small retracement again, but if markets go back to being bearish, these are always going to be the ones that drop the hardest, which is why I'm sharing. Even for shorting or to go long, like it's incredibly risky. So please do not trade this if you're a beginner. With that being said, that's what's going to be my main focus this week is paying attention to what the market is telling us. So tomorrow in our live trading session with the LPP team, instead of just jumping into the market and hoping that everything just goes in my favor, my first few trades will probably be a lot smaller than what they normally are. I might trade with 20 to 25% of my normal position size just to kind of like get a feel of the market. So if I take bad trades, remember, by having a smaller position size, it makes it easier to manage and mitigate risk because it's less of a deeper hole I need to dig myself out of, right? You shouldn't be afraid to take advantage of opportunities, but you should just respect the volatility by giving it the appropriate position size is the best way that I can put it. So my main focus this week is asking myself, is market direction clear? Are we going to be bullish or are we going to be bearish based off of the way that the market opens on Monday and then goes into Tuesday? If we see a clear sense of direction of like, yes, the buying pressure is back, we're going to go back to all-time highs, I can respect that and then just choose to go long. If I see that market sentiment still resumes to be bearish and we see some selling pressure, I can support that, and day by day, I can take shorts and close them out. I do not carry my shorts overnight because I view it to be, again, that overall market direction does not support shorting overnight because market direction long-term is still more bullish than it is bearish right now. With that being said, what are a series of economic reports to look out for this week? Remember, you guys all have access to this. It's an economic calendar. You guys can Google search and see which one is best for you. We do provide one for you for free on techbudsolutions.com, and it's under the trading tools tab. It's best viewed on desktop, but you can see that on Monday, we don't have too much going on. We have pending home sales, which might be something that people are paying attention to because the housing market is supposed to pick back up, especially with the expectation that the Federal Reserve was expected to cut rates. So maybe just like we saw with new home sales, much higher than what was expected, maybe we can see pending home sales overall for the month of August also higher than what is expected. That would support that the economy is picking back up, right? On Tuesday, the thing that I'm paying most attention to is job openings. Remember, a really big focus right now is the labor market. The Federal Reserve has a pickle. They have the weakening labor market, but they also have the rising inflation. This is what they call stagflation. So this is the focus, is the labor market as weak as the Federal Reserve is expecting it to be? If it doesn't show to be as weak, then that supports less rate cuts. If it shows weaker to be than what was expected, that supports more rate cuts. Remember, the Federal Reserve is data dependent. They're not dependent on what Trump is posting on Twitter, as many of you guys saw over the weekend. They're dependent on the data. So let's make sure that we stay focused on that, right? On Wednesday, if I'm not mistaken, we have, ISM, manufacturing index, ADP, non-farm employment change. That is one that you are going to want to pay attention to. That's about an hour and 15 minutes before the market opens. And then on Thursday, we have the initial claims and continuing claims report, and then the challenger job cuts. I'm not too sure if that's going to be as significant. But then on Friday, we have the non-farm payrolls, which is very important, 1 hour before the market opens. And we have the unemployment rate. Again, the big focus is the labor market right now. So in my opinion, for this week, the big focus is the labor market. Based off of this series of economic reports that are going to be released, will it support that the labor market is weaker than what was expected? Or is it stronger than what is expected? If you want the Federal Reserve to cut rates, meaning, that's what would cause the market to possibly go up, you want the labor market to show to be weaker than what is expected. So it's not that the market rallies off of a weak labor market. It's they rally based off of when the Federal Reserve will see that data it would support more of a rate cut. And that's why the markets would rally. It's the domino effect. I just want you to understand the why behind that. So again, instead of trying to predict, we're all here to just prepare. There's a series of reports that are going to be released this week. I do not know if markets are going to rally. I do not know if markets will continue to sell off. But guess what? We don't have to predict to be able to prepare. We can stay patient, stay calculated until direction is more clear for our criteria to be met, and then choose to take action when opportunity clearly presents itself. So I'm very excited to take on the week with all of you guys. We absolutely killed it last week, especially on Friday, shorting the market. We will see if we can continue with that same momentum, but most importantly, continue being as selective as we were the past few days. So again, if you want to watch me trade live as soon as tomorrow, the second link in the description down below will give you the biggest discount that I offer to watch me trade live every single day and join LPP 3.0. I do want to remind you, if you want to watch me trade live as soon as tomorrow, make sure you click that second link, sign up, and watch the welcome section in the LPP lesson library to see exactly how to get access to the Discord and the daily live trading session. I really do appreciate you guys' time. I hope that we're in a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.